Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news China is having second thoughts about how some industries are operating with their super competitive impulses. But first, a widely followed American leading index tracker weakened in June. The US Conference Board's leading economic index continued its fall, which started in mid-2022, and has picked up its pace of decline somewhat. The leading economic index fell by 2.8% over the first half of 2025, a substantially faster rate of decline than the 1.3% contraction over the second half of 2024. For a second month in a row, the stock price rally was the main support of the leading index. But this was not enough to offset still very low consumer expectations, weak new orders in manufacturing, and a third consecutive month of rising initial claims for unemployment insurance. And a new attack vector on the US Fed by their Treasury Secretary probably won't help. But investors are happy, pushing the S&P 500 up to a new record high, emboldened by tariff protections that will bring short-term gains. North of the border, Canadian producer prices were expected to fall in June, continuing an easing that started in February. However, they rose moderately to be 1.7% higher than a year ago. But the rise seemed to be caused by a jump in the precious metals corner of this index rather than more generally, so the impact isn't significant. More generally in Canada's economy, a central bank survey shows that tariffs and related uncertainty, along with spillover effects on the Canadian and global economies, continue to have major impacts on businesses' outlooks. However, the worst-case scenarios that firms envisioned last quarter are now seen as less likely to occur. A parallel survey of Canadian consumers revealed a concerned public, one that saw a tough future. But the US copped almost all the blame, and Canadians said they are prioritising local purchases now at the expense of US-sourced goods and services. Travel to the US is off their agenda. Across the Pacific, the People's Bank of China kept its loan prime rates at record lows during the July fixing yesterday, as was expected. The economic resilience in the Chinese economy means they're keeping their powder dry, even though American tariffs and threats remain a concern. But those resonate less at present. China seems to be taking quite broad central policy actions to transform its industrial policies. Using the excuse of the trade war crisis as motivation, it has released a digital transformation plan for their car industry alongside similar initiatives for machinery and power equipment. Within those, they are moving to promote the, quote, orderly exit of outdated production capacity, unquote, as part of its broader industrial strategy. Part of the motivation is to rein in the ultra-competitive nature of Chinese commerce at present, a nationwide race to the bottom in terms of pricing, while satisfying rising consumer standards. The big fear is that uncurbed, it'll bankrupt whole industries. They already have enough problems with their property sector. They think they don't need the same in their automotive and machinery manufacturing sectors as well. In Australia, forecasting conducted for car dealerships suggests vehicles manufactured in China will make up almost half of all sales within a decade, in a major market shift. The US Treasury 10-year yield is now at 4.37%, down 6 basis points from yesterday at this time. And the price of gold will start today at $3,393 an ounce, up $45 from yesterday. American oil prices are softer at just over $67 a barrel, while the international Brent price is now just on $69 a barrel. And the Kiwi dollar is now at 59.8 US cents, up 15 basis points from yesterday. Against the Aussie, we're unchanged at 91.6 Australian cents. Against the euro, we're down 20 basis points at 51.1 euro cents. That all means our trade-weighted index starts today at just on 67.4 and down 10 basis points from yesterday. And the Bitcoin price starts today at $117,913 and down a minus 0.2% from yesterday. Volatility over the past 24 hours has been modest at just on plus or minus 1.2%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again tomorrow.